Before we hop into today's episode, I want to say a big thank you to everyone that joined us for last week's Navigator Summit. It was an amazing experience. We had an incredibly knowledgeable audience, which was really cool because it allowed us to do some things that we weren't able to do in past workshops, including that amazing roundtable discussion with Dr. Brett Steenbarger, Mike Bellafiore, and Anthony Chung. That was, fantastic. Anyway, if you didn't see it or maybe you just want to review, you can do so. Just head over to www.tier1trading.com. Click the link that says Navigator Summit, and you'll be sent the recordings. They will be taken down on November 30th, so don't procrastinate. Don't waste time. Do it right now or as soon as you're done listening to this episode. Hey guys, Akil here. Welcome back to another episode of the Trading Coach Podcast. Thank you as always for taking a few minutes out of your day to listen to what I have to say. Do me a favor, if you are a supporter of the show, if you love what I'm doing here, you like listening, and you want to show me your support, do so by leaving me a rating or a review, or both, I guess, on whichever podcasting app you listen to this on, preferably iTunes. That is the best way you can show your support. I want to talk a little bit about really a tweet that I just saw, or an Instagram post of a tweet that I just saw today, and share my opinion because I think it's an interesting subject, and that's what this podcast is for, right? Unplanned rant. But Stephen Burns, right, who is someone that I highly respect in the industry. He has a website called New Trader U. He works, has a few good books out. I've read two of them, really beginner type of stuff. He likes to share a lot of tweets and quotes and whatnot from other traders. And today he shared a tweet from Peter Brandt, who is someone else in the industry that I look up to. Peter Brandt is... He's been trading since the 1970s, I believe. And what's cool about Peter, what initially attracted me to Peter Brandt, is he was one of the first traders that I heard coming out that was really honest, and it was refreshing. He was saying stuff like, hey, historically, I'm only about a 40% trader. Whenever I enter a trade, I expect it to lose, and there's no kind of golden chart pattern or anything like that in trading. And that was a refreshing moment for me because at the time, this is when I first found out about him. I was making that transition from magic system, $1 million a day type of deal to really trying to figure out, am I the one struggling in this trading thing, or is it, is there something else going on? And reading a lot of his content and listening to a lot of his stuff made me realize that it wasn't necessarily me. I just had the wrong expectations about the market. But the tweet that was shared today said something interesting. He said, I've made my living since 1975 trading futures markets using charts, right? He is a classic chartist, firm believer in technical analysis. Just to give you some background. He says, my conclusion on chart trading is this. 1, charts do not predict prices. 2, most chart patterns fail. 3, charts simply tell us where a market has been. And 4, the only value in charts is for trade/risk management. And I know a lot of you guys listening to this, you are technical analysts as well, or maybe you're leaning that way. And initially, you're probably hearing this and you're like, what? How can a technical trader say that? How can they say that charts don't matter and patterns always fail or whatever and whatnot? And you'd probably assume that I'd have something, some type of comeback. But you know what? I actually agree. Now, obviously, I can't put words into Peter's mouth, and I can't tell you his opinion on this, but I can share a few mine, and that's what I want to do here. And we'll start with number 1. Charts do not predict prices. And this is an interesting one. And a lot of this is going to be how much you want to dig into the wording and whatnot. But charts don't tell you, and this is how I interpret it, charts don't tell you where price has to go, right? One of my pet peeves is that I really get upset. It really bothers me when I see people tweet or share stuff or even say stuff where it's like, price has to go here, price will go there, price must go there, right? It's offensive to the market in the way, right? In general, the market has one rule. It will do whatever it wants whenever it wants to. It doesn't have to do anything. It's kind of like Mother Nature, right? Tornadoes and natural disasters, right? You can't tell Mother Nature that it can't create a tsunami. Mother Nature can do whatever it wants, right? So it's a little bit of offensive to think that we can control that. So when it comes to the charts, I don't think charts tell us that price has to go to a certain place, or price will go to a certain place, or price must go to a certain place. Now, this is where we can kind of dig into it. When he uses the word predict prices, and this is kind of I kind of disagree with this side. I do think, and again, it depends on how you want to word it. I think a price chart can tell you if price is going to go in a certain direction, what type of range price is likely to go into. Now, if you want to call that a prediction because it's not very specific, it's not really saying price has to go that way. It's more of an if. So instead of, hey, price has to go to 92.30s, it's more of a, well, if price does go higher, then that 92.30s area is probably going to be the next destination. So again, I don't know whether that counts as a prediction, whether he meant it that specifically, but I kind of agree. It doesn't tell us where price is going to go. It just gives us an idea of, if we head in that general direction, where it's likely to, I guess, end at or go to. Number two, most chart patterns fail. And I do believe in this, right? I think there's too much made of chart patterns. I always recommend traders check out a book called The Encyclopedia of Chart Patterns by Thomas Bulkowski. It's a great book. It talks about it. It's an encyclopedia, so it's not really a book. So you don't read it front to back, but it's a reference guide. And if you're someone that likes chart patterns, you're going to find basically every single chart pattern in that book. And there's going to be a detailed breakdown of everything you need to know about that chart pattern. With that being said, I am I'm really big on, and you've heard me say this numerous times, right? The where is more important than the what, or the what is not as important as the where. And that means the what is the chart pattern, right? The specific thing that you're looking for in the chart, a cup and handle, a megaphone, a descending triangle, ascending triangle, double top, double bottom, advanced pattern formation, whatever you want to do it. That is the what. The where is more important. The where is the overall prediction. So the where is essentially the overall lay of the land. And when I first started trading, right, again, I was caught up in, everyone asks, if you can go back in time, what would you change about your trading? And I always say that I focused too much on what to trade instead of learning how to trade. And when I say that, what I mean is I was just looking for the shortcut. I was looking for, hey, give me the pattern that makes me money. Give me the signal that makes me money. What indicator makes me money, right? I didn't really care about learning how to analyze the market. It was rather just give me the strategies. Give me the answer to the test. I don't want to know the concepts, right? Just give me the answer. What's the answer to number one? Okay, C. Boom, put it in there. And obviously that it caused me to have a lot of missteps in my career. But I learned a lot of lessons. That's why I have no regrets on my trading career. All the mistakes I've made eventually became lessons. They're lessons that helped me become the trader that I am today. There are lessons that helped me become the coach that I am today. As now I can kind of tell you guys, don't do this dumb stuff. Why, Akil? Because I did it. Trust me, right? But something I did was when I first learned about simple pattern formations, I just thought and assumed they work, right? So I learned about the AB equals CD pattern. That was easy, right? So I just got to draw a line, hit copy and paste and draw another line and then put like a sell order there. Easy, right? And I would do that and I got burnt in the market. Same thing with double tops and double bottoms. And of course, at the time, before accepting blame, I would shift it and be like, oh, patterns don't work, blah, 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 blah. But as I matured, as I learned more about actually how to trade instead of just what to trade, I realized that these patterns are important. They do give you a lot of clues and a lot of information about the market, but they can't be the only thing. It can't be the only factor taken into account. So in general, right, if you were to tell me that you're trading a specific pattern formation and you're just trading every single one of them, you're not having any other filters, no other type of analysis, no bias created based on higher time frames, anything like that, structure, what have you, I would agree. I would say that you're going to bleed money in the market doing it, right? So if you're searching for the magic chart pattern, you're probably going to lose money. The power in chart patterns come from when that specific chart pattern occurs at a very specific location in the market that is aligned with your overall bias about the market. That's when they become more powerful, right? It's your normal sports example, right? It's I was a receiver when I played football, right? It's no different than having the greatest receiver in the world, but you have no quarterback to get the ball to him, right? A receiver is pointless if you don't have someone that can get the ball to him. They can beat a man on their route. They can get open, right? They could be standing in the end zone, wide open, no one around them. Guess what? If your quarterback can't get you the ball, you can't get it to the receiver. So the receiver is pointless. Same thing for the quarterback. If you don't have an offensive line that can block for that quarterback, the quarterback's never going to have time to throw the ball. So if you have a great quarterback with a horrible offensive line, same thing, right? So it's very similar, excuse me. So unprofessional. Very similar to trading, where everything has to be in a line, right? You see the magic work when you have an offensive line that can protect for your quarterback, when you have a quarterback that has the ability to throw the ball and throw it with accuracy and make good decisions, and you have receivers that can go out there and catch, right? It all needs to work together to have success in professional football. Everything needs to work together: the analysis, the projection, the risk management, the actual pattern formation, the filters in trading to have a good trade as well. So I agree with that 100%. Number 3, charts simply tell us where a market has been. And I agree with this, yeah. Charts show us past performance, right? And you think about it, it's pretty obvious, right? A chart is what's happening in the market after it happens, right? So when buy and sell orders come through, the candlestick moves after they come through, right? Is historical representation of price. So a chart is telling us what has happened in the market. Now, that's not pointless, right? We know that we can use past behavior to make predictions on future behavior. So I don't think Peter is saying this either, that it's pointless, but we need to understand what the chart is. It is historical performance of what has happened. Even when we talk about backtesting and all that fun stuff, backtesting is historical performance. Backtesting doesn't tell us that something is going to work the exact same way in the future. It just gives us clues. It shows us tendencies. It shows us important levels. It allows us to look at habits where it's like, hey, when this happens or if this happens, then the probabilities say that this should happen as well, right? Same thing, think about blackjack at the casino, right? There are rules on when you should take a hit and when you should not take a hit based on what the dealer is holding, whether it's a 6 and above or showing a 6 or showing below a 6 or whatnot, and assuming that there's a face card or a 10 underneath there. It's the same thing, and I have another analogy on my head, and I just forgot it, past performance. Anyway, we'll just keep going on. Brain fart, Akil. It's just finished doing a video, so my brain's kind of shot. But yeah, past performance allows us to make predictions about the future, but it doesn't necessarily mean that they're likely to happen. It's all a game of probabilities. Human nature was what I was going to tell you about it. If we're walking down the street and I reach my hand out, right, in a motion that looks like I'm going for a handshake, right, pre-COVID, of course. The response that I would expect 9 times out of 10 is someone to shake my hand. You see it with little kids all the time. If you put your hand in the air, right, for like a high five, 9 times out of 10, they're going to give you a high five. You can easily make those predictions on what is likely to happen based on what has happened in the past, but doesn't mean it's always going to happen. No, maybe the kid doesn't see you. Maybe the kid's in a bad mood. Maybe it's COVID and the person doesn't want to shake your hand, right? It doesn't mean that's going to happen for sure. Last one, number 4. The only value in charts is for trade/risk management. And in general, risk management is something that is not spoke about talked about, whatever you want to say. It's not talked about enough in trading. And a great quote that I've always heard from many great traders out there is that a good trader is a great risk manager. A good trader is a great risk manager. And that's all we're essentially doing. We're playing probabilities, and we're playing those probabilities with good risk management. So, Jason Greystone says all the time about his preferred strategy, right? He has a preferred strategy where he would like to win more than 50% of the time. You don't need to win more than 50% of the time to be a successful trader. But for him personally, for psychological preferences, he would like to win more than 50% of the time. He would also like to put himself in a position where when he wins more than he loses. And if you just add those two things together, that's going to equal success. If you win more than you lose, and when you win more than what you give back when you lose, you have a profitable strategy, right? So managing that risk is key. We always talk about risk reward, and charts are important, right? Because they can tell you based off what we talked about with number one, where charts can kind of give you an idea of if price is to go higher, here's where it's likely to go to. If price is going to go lower, here's where it's likely to go to. We don't know if price is going to go higher or lower, but based off the information that charts tell us, we can put ourselves in a position where we are great risk managers, where we can say, okay, well, if price goes lower, I'm only risking this much. But if price goes higher, my profit target would go somewhere around here, which is going to be 2 times my risk. Now we're putting ourselves in a position where we don't necessarily have to be right more than we're wrong, but when we're right, we're going to benefit more than what we lose when we're wrong. And if you can consistently do that, and again, if you can have a system with an edge, whether it's above 50% or below 50%, it doesn't matter. You can be profitable all types of ways. But if you're managing your risk correctly, that's the real game of trading, and that's the most important thing that new traders need to understand. So it's an interesting list. I'd love to hear your feedback. You can do so. You can shoot me a DM. You can type it in on the Trading Coach podcast group, message me on Twitter, type it under YouTube page for a comment. It doesn't matter. I love having these different conversations because every trader is different. Every person is different. We all have different opinions. And I love having discussions, not arguments. And I think this group, especially you Trading Coach podcast listeners, you guys are really good at having discussions. Whereas the other parts of the internet maybe aren't so good, where they're so stubborn and fixed mindset based that they just want to argue and yell about their opinion instead of being open to, oh, you know what, that kind of makes sense. Or, hey, you know what, that makes sense, but this. So if you have anything to say about it, let me know. Thank you guys for listening. And until next time, plan your trade, trade your plan. Take care.